Good morning, everybody. So today is going to be one of the most in-depth tutorials I have done to date. Everything you will ever need to know about the markets and how to trade them will be in this video. So if you really want to know how to become a successful day trader, stick around, because this video is literally going to change the way you think and trade and your overall mindset of the markets. Alright, so one of the first things I want to start out with is, if you have a small account and you're watching these gurus who are making $20, $30, $50, $100,000 per day, and you have that in your mindset that that's what you should be making, you might as well pack up your bags, take your money out, and go spend it on yourself and enjoy it. Otherwise, you're going to lose it all trying to replicate what they do with millions of dollars, okay? So that's something I just want to throw out there on the table right off the bat. Second, if you are under the PDT rule, you get 3 trades a week, all right? With 3 trades a week, it's going to be hard and it's difficult for most traders. All right. The most profitable way to trade is to trade to the short side. All right. 95% of traders fail. And if you ask any one of them where they lost all their money, they would tell you going long to the upside, which is why they make it difficult for people to short. Okay. Now, some people will disagree with me on that, but trust me when I tell you, shorting stocks is not only much easier to be profitable, but it's less stressful. All right? Stocks always go down. The morning runners that 99% of traders play, they're one and dones, or they'll run for 2 or 3 days and they'll fall apart. What you're looking to do is you're waiting for the snake to rise up so high that he has no more stamina in his body or muscle on the ground, that he has to come back down. All right, I call it cutting the head of the snake off. Once that snake gets to a certain point, he can't go no higher. All right, so there's a lot of things we're going to cover in this video, including shorting. But I just want to set you guys up for success. I want to tell you guys basically everything that I know in this video, what I'm looking at, what I'm seeing, how I enter and exit trades. I just told our group this morning on BBIG right before the bell. I said, hey guys, BBIG has RSI divergence to the downside, all right? So what your market makers do is they trap everybody, right? They push this stock all the way up to $12.21 this morning. And I just can't imagine all the people jumping in this stock because the first candle is skyrocketing, okay? That is called FOMO, fear of missing out, and all too many traders have it. All right, the number one rule in trading is patience. You have to be patient with the markets. If you don't know how to trade, don't trade, because you're going to lose your money. I tell our traders time and time again, trading is nothing more than a glorified casino. All right, you're trading against an algorithm, and the best minds in the world put that algorithm together. All right, you can look at 10 different tickers and they all have an identical chart pattern. Why is that? Because it's an algorithm. You're not trading against other traders like you see here in the time and sales. So get that out of your mind first and foremost. All right, you're trading against an algorithm, and it's an algorithm that is designed to lure in traders. All right, here's the market makers up here, and they got their fishing poles out, right? So what they do when they drop that bait with a little fish on the end of it as the bait is they pull junk like this. Okay, this first 2-minute candle at the bell ran up $1.20, okay? Trapping traders all along the way because they were looking at the bait, right? They took the bait. And then what do the market makers do? They pull them all right out of the water and throw them in the boat. Okay? This is a market maker's boat filled with money. Right? Here's the market maker smoking on a cigar, laughing with his buddies about how many fish he just caught right here. So how did I know that this was not going to work to the upside? One of the tools that you need is called the RSI, all right? Before I even get into that, let's show you my setup here. All right, so I have 4 charts. When you first log into Thinkorswim, your screen is going to look like this, okay? This is what your screen is going to look like. So first thing you're going to want to do is come to charts right here, and that's going to bring up one big screen. So in order to get where I'm at, you come here to this little panel and you click on 4. All right, so here I have a 1 year 4-hour chart, 180 day 4-hour chart as my first chart. My second chart is a 5-day 15-minute chart. My third chart is a 5-day 5-minute chart, and my fourth chart is a 1-day 2-minute chart. I trade off the 2-minute chart. I just like it a lot better. It shows me double tops. It also shows me double bottoms. Okay, so I trade off the 2-minute chart. I look for double tops and bottoms not only on the 2, but the 5 and the 15 and the 4-hour as well. All right, so let me give you an example of that. On the 4-hour, we have double tops here. Stock went down. We have double bottoms here. Stock went up. Double top here. Stock went down. Double top here. Stock went down. Double bottom here. It went up, but it came back down. Traded sideways. Double bottom here. Stock went up. Double top here. Stock went down. All right. I want you guys to get in the habit of spotting double tops and double bottoms. All right, double tops and double bottoms are your best friend. Okay, let's look at the 15-minute chart. What do we got on the 15-minute chart? Who can spot it out? Double top, double top, double top. Okay, now let's look at something else here on the 15-minute chart. Notice all the double tops are in a zone. All right, if I put my line right here, all the double tops came right up to this line, like clockwork. Double top, double top, double top. I call it the double top drop, the double top drop, the double top drop. Okay? And I call this the double bottom pop, the double bottom pop. All right? So you're looking for specific areas and locations. Now, with that said, let's take a look here. Okay, because some of you might look at a 5-minute chart and say, double top, we're gonna drop. Double top, we're gonna drop. Double top, we're gonna drop. Right? It's real easy to get in that habit. So you have to understand location in double tops. All right. What I teach our traders, we have 2 lines on our charts, and that's it. Some of us have 3 with the VWAP. Sometimes I use the VWAP, sometimes I don't. I really don't. I pretty much just incorporated it for teaching people. And now that I've been teaching for a while, I'm kind of back to my old ways. I only need 2 indicators, okay? I need a 20-minute moving average and a 200-minute moving average, okay? That's all I need. In my head, I know where the VWAP is going to be. All right, it's going to hang right out here with the 20-period moving average. It's the same thing. People use that as divergence, and, you don't... This is what I need. This is all I need. I don't need all these charts with, 10 million things going through them. So the only thing I could see at the end of the day is 5 billion lines on my chart. That's not how you trade, all right? Again, look at this. Double bottom, pop. Double top, drop. All right, this is the 2-minute chart. All right, so now that you got your 4 charts set up, next thing you want to do is link them, which you could do right here. You want to put them all on the same number, the same color. Over here, I have my watch list, okay? In the link here on Discord, look for the pre-market scanner. All you got to do is copy and paste it in here to Thinkorswim. And to do that, you go to scan, and then you just type in whatever I have on there. I might get into that in this video at the end. We'll see. But right now, I just want to set you up with the basics. Get you on the same page as where I am. Alright, so in order to get your 20 and your 200, you want to come up here to studies, okay? Add a study. Let's go to the beaker icon. And we're going to type in MMA. Alright, we're going to type in SIMP, simple moving average, alright? You're going to want to click that once, add selected. Click it twice, add selected. Then what you're going to do is come over here. You're going to change the length of 1 to 200 and the color red, and you're going to hit OK. The other one, you're going to change the length to 20, hit the color green, hit OK, and you now have your 20 period moving average and your 200 period moving average on your chart. Alright, so BBIG, just like we talked about, the double tops over here don't mean anything because we are on an uptrend using the 20 period moving average. Alright, the charts like to, let's go to my 2 minute because it'll be a little bit easier for you guys to see that are new and this is your first time watching it. But if we come here to this section, what the 20 period moving average does is the price action likes to pop off the 20 and pull back to the 20. Pop off the 20 and pull back to the 20. Off the 20, back to the 20. Off the 20, back to the 20. Off, back, all the way up, okay? The only place you should be looking to get out of a position on a rising 20 is when the price action breaks the 20. That's when you're looking to close out your position using the rising 20 strategy, okay? So all these double tops that you see here on a rising 20 are just indicating your little pullbacks to the 20. Now, if it pulled back and broke the 20 and continued down, you're looking to exit when it broke the 20 period moving average. Okay, everybody with me? All right, so we all got that. Strategy 1 requires a 20 period moving average and a 200 period moving average. How do you use them? When the price action is above the 20, you're looking to go long. Okay, when the price action breaks the 20, you're looking to get out. Vice versa, if you're going to short a market, you're looking when the price action breaks the 20 to short, or when the price action comes up to a resistance level. So this is where we're going to get into time frames, all right? So why do I have the one year 4 hour chart on my time frame? Now, what I want you guys to do is watch right here when I draw my line up here, okay? So let's go ahead and put our line here. Right here at the top, the double top. Alright, not sure why that did not come all the way through to down here. Something's not right. I don't think this is linked correctly somehow. Not really sure. But anyway, let's look at the price that this was at. $10.29. Where were we at right here? $11.27. So we are $1 higher in this area. Let's go to the $10.29 mark. All right, $10.29, right in this area. So let's get it. All right, now let's expand this out. Actually, let me bring this back down. All right, so let me do this for you. Let me clear these two out. Bear with me 1 second. All right, so those are gone. So let's go to our 15-day. Is this 15-day? 5-day, 15-minute. And let's draw the same line right here. All right. So this line technically should have came across all of my charts. I'm not sure why it didn't. I'm gonna have to jump back in later. So let's go to the same area over here, which is $10.30 area, which is right here. All right. So now that line came through. It came through all three screens. Okay. Why did we draw this line here? Because of this line. When you look at any chart, any ticker that's running in the morning, right? This one here is a mess. I use a lot of these for teaching with the group. So let me remove all the drawings. All right, so this one's working properly. So what you're looking to do is find previous areas where the stock failed, okay? So right here, we're going to mark one area here. We're going to do another area right here because you could see it kind of had trouble, pulled back. Our next level will be here. Our next level will be here because this is where we had the high. We came up to it again and it failed. So now we're down here in this lower time frame. So now we're going to put our top line right here, okay? Our next line will go right here, because of here. And then our next area would be right here. And then we'll put one more right here since we're so far away. All right, this is closed. Now notice how those lines on the 1 year chart followed through to the 15-minute, the 5-minute, and the 2-minute. All right. So on the 5-minute chart, yesterday when we got in this area, notice the price action came back, pulled back from a previous high, and then came back and tested it, came back again, tested it, pulled back. But notice it did something different in this area. We came up here. We broke. Oh, I don't know why these things do this. We broke through. We came back down. We broke through a little bit, came back down. We broke through. But now, instead of this being resistance, right here, it became support. Okay? So we tested 1, 2, 3 times, and then it became support. So now instead of this becoming a resistance level to the upside, it is now support to the downside. So notice we tested support once, and then we continued to rise. Now let's see what we did after that. We never did come back down to that support level. But we had resistance in this area. So we're going to draw a new line. Because why? Because the price struggled in this area. Notice we draw that line. And this is why it works. And why it is the way it is. But we had double tops. If that happens one more time, we had double tops. And then the price pulled back to this, which was resistance, which is now support. And then we got a bounce. Then we had double bottoms in a location. Okay, this is a location. We broke through the 20 on this, so I would have closed my position. When would I have gotten back into the position? When we had confirmation of a bounce, we had double bottoms, and we re-broke the 20. All right? This would have been an entry point, and as long as you didn't get taken out, which you would never did, you could sell whenever you feel like it. All right? The trend did start weakening here, and it didn't really hold up that well, as you could see. So right here is where you want to draw another line for your major resistance level. Notice we came up to the level, bounced down to the support, back up to resistance. We fought, and then it dropped, but it never dropped back to the resistance level or support level. And then we came here and it just failed. But what do we have down here? This is called your relative strength index. I find that this works the best on the 5-minute chart. All right. So here we have something that is called divergence. All right. Notice the stock made a high here, but a much higher high right here. But notice your RSI made a lower high. Okay. So your RSI made a lower high, but your stock made a higher high. Right there, and your confirmation of right there, what do you have? You got a double top. All right? So that's two pieces of information that you have to confirm that this would have been your best place to exit the trade. Again, we had a stock that made a higher high and an RSI that made a lower high. So this would have been your confirmation right here, one piece of evidence, two pieces of evidence that you have the double top up here to get out of this position. And your last and final piece of information is that you have a lot of space between the 20 and the 200, and you have a lot of space between the 20 and your price. All right, guys, I want you to watch this video 100 times until you get it, because this is the only video you will ever need. And 5 years from now, if you disregard it and you come back, you'll understand what I'm telling you, and you'll realize that what I was telling you from day one is that this is the only video you will ever need to learn how to become a successful day trader. All day trading is finding support levels, resistance levels, understanding double tops, double bottoms on multiple time frames. All right, multiple time frames is key. And your RSI divergence. All right, guys, it's nothing more than that. And anybody that tries to tell you there's a magic indicator or there's a special this or a special that, they're lying to you. All right, they're taking your money. 90% of those traders who are selling courses don't trade. All right, so let's go back to BBIG. This is the one I called out this morning. Again, what did we have here? We had this area right here became our first area, right? Our first new area to make a new high. So right here it struggles. So what do we do? What do we know to do now? We know we need to draw a line where we had a problem, where we failed, right? That's how we know we're drawing a new line, okay? So with that line drawn, notice with this line as well that we now have resistance, support, and where is the stock most likely to pull back? Right here at resistance, which it did. Okay? Now we're trying again to go higher on BBIG. I would not be looking to go long until we broke this dollar amount. And I don't mean we broke it by 5 cents. Okay? Remember, that's exactly what they want traders to do. As soon as it breaks that, they want traders to pile into it. Why? We just went over it, guys. Why? Because the market maker's up here in a boat with his fishing pole out. And he wants to catch some fish. You never get in on the first break of anything. I don't care what they tell you. All right? I always call it the first breakout, fake out. You'll get that green candle to break it, and then your second candle will pull you right back under the water. All right, so you want confirmation. Now, what do I mean by confirmation? What I told the group this morning about BBIG, and I wasn't trading today, so I was late to the table, but we had resistance right here, and we had resistance right here. But we have an identical price action, right? But the RSI is to the downside. So what does that tell you, guys? That tells you that the price is not going to continue to go higher. Now let's look at what else we have here. On the 5-minute time frame. Double tops right before the bell. All right. Again, we even have divergence right here to the downside. We have a higher high, but a lower high on the RSI. So that's telling you that it's not favorable that this price is going to shoot up. All right. Why did this shoot up? Because the market makers probably dumped $1 million or $2 million into it to fake out that bar. I'm just kidding on that, but that was your indication that the stock was not going to make a new high, all right? But it was probably manipulated. Again, they're out there fishing. They know how people, when something starts shooting up like that, everybody wants to jump in on it, especially new day traders. They think, oh my goodness, I'm going long. I'm going to be rich today. And then what happens? Right now, I would guarantee you, there is millions of dollars trapped right here. Why is there millions of dollars trapped right here? Because most traders don't have a set of rules, right? Rules are what's going to keep you in the game. If you have an account with $2,500 in it, make a goal. $250 a day is your goal that you want to profit. And the max loss you want to take on that is $25. All right? Most traders do it the opposite. They'll let their max loss run up to, on a small account, let's say $700-800. And they'll just watch their money go down, down, down. And they'll do just the opposite when the price goes up. As soon as they're up $100, they close it out. Right? They do exactly the opposite of what professional traders do, which is let your winners run and cut your losers immediately. Cut the head off. 2 seconds. Don't even hesitate. Shut it out. You're done for the day. Walk away from the table. Tomorrow's a new day. All right? Especially if you have a small account. Now, if you're doing this for a few years, you don't have the PDT rule, you know what you're doing, well, then the rules can change. But for new traders, man, you got to cut your losses so quick, it's not even funny. All right? If you had a McDonald's soda and it started spilling on you, what are you going to do? Are you going to let the whole cup spill all over you? No. You're going to fix the situation immediately. So do the same thing with trading. If you have a cup and the cup gets a hole in it, stop that hole immediately. Don't let it run out all over you. All right? So, where are we at now? Back to the charts. All right, so right here, RSI divergence to the upside, right? There's several factors that go into reading the charts. The biggest one that you want is to plot your lines, okay? You want to plot your support and resistance lines and watch the stock. Watch what it does in between those lines, all right? So right here, we broke through it a little bit. Here, we broke through it a little bit as well. But we had an even price amount. Now, the RSI made a higher low. Right here, while this was identical, this made a higher low. So this is where you're looking to enter the trade. All right? So you should have been looking to enter this trade right here when this RSI divergence line didn't come anywhere near this point. Because notice the price action was the same from here to here. But your RSI didn't come anywhere near that level. Okay, so this is where you're looking to get in to go long. When you have RSI divergence, again, from here to here. Notice your RSI, higher high, but your price action is the same. Hope that makes sense. Now, to get your RSI on your chart, go to Studies, type in RSI. Right here, your RSI. Click on it, click Add Selected, click OK. Now, I keep my RSI at the length of 14, overbought, oversold, 50-50. Why do I do that? Because anything above 50, I'm looking to go long. Anything below 50, I'm looking to short. All right? So look where I could have started shorting on this right here. And I could have wrote it down to here. Right? I would have been out right here, same price point. Why? Because the RSI divergence made a higher high. Okay? Just in that little time frame. So right there, that could have been almost a dollar move. 10,000 shares, that's $10,000. Just using the RSI, right? Just from here to here. It's not rocket science when you know how to use tools that matter. All right? Out of all the tools, I mean, look at this list of tools. All right? Let's add a study. Look at this. Guys, they have source codes. I mean, they just go on and on and on. The list is endless. Why do you think they have all this? I mean, seriously, ask yourself, why do you think they have all of these studies in alphabetical orders? I mean, there's literally thousands upon hundreds of thousands of things you can add to your chart. Why do you think that is? Because they want you to think it's complicated. They want you to think it's complex. They want you to think that trading is hard, right? They don't want people knowing how easy it is to trade. They want you they want your psychological mindset to be, I can't do this, right? They want your chart filled with 100 different indicators. Because if it's filled with 100 different indicators, you're not paying attention to the most important thing, which is price action. Okay? This is it, guys. I got 1, 2, 3 indicators on my chart. That's it. That's all you need. Right? Guys, you got to remember, and I know I've said this 1,000 times, the stock market can only do 3 things. It can go up, it can go down, or it can go sideways. Can't do anything else. Right? So are you telling me if the stock market can only do 3 things, why in the world do we have thousands upon thousands upon thousands upon thousands of studies and strategies and things that'll just make your head explode? I watch some of these gurus and, on their live streams trading, and I'm looking at their charts. I'm like, what in the world are you looking at? I even showed clippets here in my group of traders that are looking to go long, and I'm telling my traders, guys, they're going to lose, trust me. And I tell them why, okay? This is all you need, guys. You need 3 things. You need a 20, a 200, and the RSI. Anything outside of that, it's your own fault. In my opinion, okay? Some people think that they can have all these magic fairy things and they say they work. I don't buy it. I see the best of the best losing time and time again, buying up here. Why in the world are you buying to go long up here? This is where newbies are getting into positions, right? You should be buying down here. But, it is what it is at the end of the day. All right, so let's move on. Up here, in our group, in some of the videos, there is the standard deviation channels that I have here. I only have it on the 15-minute chart. And what does the standard deviation channels do? All right, here is your middle standard deviation line. All right, let me get a different color. So this is your middle standard deviation. Notice the price action likes to go away from it and come back to it. It'll go away from it and come back to it. It'll go away and come back. We have the same concept with the 20, the 200, and your VWAP if you want to use the VWAP. I don't use it. This is all I got. I got 3 indicators, a 20, a 200, and the RSI. They're the most powerful indicators out there, and they tell you the story before it happens. All right? So, look at BBIG. Again, you could have made this nice $1.30 move based on what? What 2 factors could you made that nice move on? Who could tell me? Anybody yet? Anybody? 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 All right, I'm going to throw you a curveball. There's 2 factors. It's not on the 5-minute. Divergence to the downside. All right, you could use it on the upside or the downside, but from here to here, we had the same price and we had a lower price on the 5-minute. But if you come over here to your 15-minute, from the same 2 areas, we had an upside divergence, right? We had double bottoms in a location, which is at support. So you could have took this trade to the upside for $1.50. All right? 5-minute time frame, I like to use it. It gives the most indications on the RSI, but I'm always looking at my other 15-minute RSI and my 2-minute RSI. Notice my 2-minute gave me the same reading as the 5-minute from that area, a downtrend, right? But we're in a location, so you have to understand that the RSI is tied to location areas as well. All right, so even though this was giving me a downtrend, it's the location of where we're at. All right, right here we were in a location, right, and it clearly had a downtrend. Okay, going to the upside here, we had an uptrend. We had the same price, but this was in the location. Our ticker is number 1, 113 million volume. Daily average 54 million. Today's average 113 million. There's a good chance this is going to continue higher right here. Okay, before I would really look to go long for, if I was a newbie or I didn't really understand the stock market, is I would either A, wait for a test, a retest, a retest, a retest, and then a move higher. Every stock does it. All right, you're looking to break the $12.21 high, and you're not looking to buy the first candle above it. You want to see if it's going to continue higher on a rising 20. All right, you want to make sure that your 20 is rising. Then you're looking to play that strategy. So let's look at our 2-minute, all right? I said this morning in the group chat, I was looking at this 1020 area. We pulled down, we bounced, we pulled down again, we bounced, we pulled down again, we bounced. Now we're making higher highs and higher lows in that area, all right? So now let's throw in another trend line. So now here, where this little dollar sign is, we're going to go to our curved drawing tool, which is this one. So we're going to take this from here, and we're just going to draw it. We'll just put it right here. If you want to extend this line, actually, I'm going to put this one where I would have put it this morning, which would have been right here. All right, I would typically color this blue. I would click right extension on, okay. Now it extended it out and it'll be on my charts. So now I would draw another trend line from right here to right here and see if we hold this trend line. All right, because your 20 is all over the place right now. So that is not a tool you're going to use in a situation like this. All right, what you want to use now is trend lines. Okay, what is the trend telling you? You want to pay attention to your support, or your support, sorry, support is always the bottom, and your resistance and your trend lines. That's what you want to pay attention to now. All right, so this morning notice we clipped here on this one where I would have originally drew it, and then this one we broke through it here, but we're in a location now, and a location with double tweezer bottoms. That would have been a good long position. All right, now you're always looking to get out of a position in the resistance area. All right, that's just how the stock market works. It's going to come in these zones and it's going to trade within them. That's how it's set up, guys. All right, it's simple. Now we're going to see if we're going to continue this trend up, or if we're going to break through this trend line and continue down. But if we continue this way, right, and we make these higher highs, I wouldn't be looking to get in if I was a newer trader till after we broke this high with confirmation and holding it. All right? As a beginner trader, your best friend is going to be the 20 and the 200. Your entries would be above the 20 on a rising 20. All right? And your exits are when it breaks the 20. As you grow more comfortable trading within these zones and you want to scalp and you're more profitable, all you got to do is rewatch this video. All right, you're looking to exit at resistance, you're looking to buy at support. Okay, there's no guarantee it's going to make it back up to either one, but you have your RSI as your best friend. All right, so notice we're bouncing off this trend line now. Now, one of the ways, this one is not giving us the right side of the roof yet. That's in another video here. All right, but I'm just going to draw a line that I call the right side of the roof, and you'll see it more as the stock falls apart. But the right side of the roof, I'll typically draw like this. All right, now let's edit. Well, let me get right here. Let's edit the properties. Gonna turn it blue. Now look at the right side of the roof. Notice it on the way down, it never broke the right side of the roof until that first 2-minute candle. And then what happened? It came right back down and stayed, and then it broke it again, pulled back down. And here, every time it breaks the right side of the roof, you're waiting for confirmation. All right, like here, we broke the right side of the roof. The very next 2-minute candle made a higher high. So now we have smoke. I call that smoke. All right, if we just break it and come back down, you're still following the right side of the roof. All right, but you're looking for smoke. You're looking for a continuation. You're looking for smoke out of the chimney, and you see what it does. All right, so right now we're going to draw another right side of the roof right here. Notice how it hits the right side of the roof, and you could draw the right side of the roof on the second or third red candle, and you just watch how it hits the right side of the roof and respects it. All right, on any chart, I don't care what chart, what ticker, the right side of the roof, I call it the Hobbit house. You got the left side, you got the right side. Once you see smoke, you're looking for an entry. All right, but you want confirmation. So right now we came off of this trend line, right? Now let's see if we pull away and retest it and continue higher, or if we break that trend line. All right, so we're at a point now where you're kind of in a waiting game, and typically these stocks will start making better moves in the afternoon after 2 o'clock. You know, most days they'll trade sideways, but lately we've been seeing a lot of nice moves in the afternoon into the after hours. So as a beginner trader, also even seasoned traders, or the beginners that are under the PDT rule, you know, lately the best time to trade is in the afternoon into the overnight. All right, coming into the bell here, I rarely, ever hold a position into the bell. I always want to be closed out right before the bell, because 9 times out of 10 you'll always get the initial dip and then rip. All right, it's infamous, unless there's just like some major news, and this was a 2 million float stock and they had the cure for cancer. Well, then I'm going to stay in that ticker right through the bell, because I know what's going to happen with a stock like that, with a float like that, with news like that. All right, one of the things I can tell you if you're new is to come into, on every single ticker, right, click the 3 little bars, and right here it says Think Log Notes on BBIG. Hit create Think Log Note. All right, and now just type in how the stock reacted, what time it moved, whatever you need to, and then hit save. All right, so the next time you see BBG on your chart, it doesn't mean it's going to be identical every time, but you can always go into these 3 little bars and look at your notes. So let's just type in BBIG failed at the open. Okay, we save that. So next time we see BBIG, we come to our Think Notes, view BBIG today, and we're going to say, oh, you know what, last time this failed at the open, that's right. Okay? And or you could put failed at the open, had good news, above average volume, and then save it. Put in as many things that will remind you about a ticker as you can. Was it a junky Chinese stock? Was it a sketchy penny stock? The more the merrier, because what you're going to find after doing this is the same tickers are going to come up month after month after month after month after month, right? The other day, I forget what I shorted, but I told the group the night before I was going to short it. Why was that? Because it had a history of popping in the morning and dropping in the afternoon. I mean, you could set your clock to this stuff, guys. It's not that hard. But you have to be disciplined, and you have to be structured, and you have to have the mental mindset to follow through with your goals. If you don't have a goal, you're not going to succeed. If you don't have a plan, you have nothing to follow, right? I come into the markets every week. I spend about a couple hours on the weekend, looking at everything that ran on Friday, everything that ran last week, and I pick the best of the best setups that I want to watch. Now, I have multiple monitors. I have a lot of tickers open. But you're looking for locations and zones, all right? That's all this is about. That's all the stock market is about support and resistance, okay? Let's go to, let's just look at SPRT. All right, SPRT has been in a downtrend. Let's go to mRNA, Moderna. All right. So notice on Moderna, I have key levels set up here. It looks like a lot of rubbish here to you guys. This one I was training the group on. Looks like a lot of stuff here. But notice as we get down to the 5-minute and the 2-minute, the chart's a lot clearer, a lot more easier to see. And again, I had this all set up here for our group. But the lines are still relevant. Notice how these lines yesterday, look at what happened yesterday. I haven't touched Moderna in 2 weeks. But notice where the stock comes to and stops. Okay, it came to a resistance and stopped. A resistance and stopped, right? And then we broke through the resistance, and then right here it used resistance as support. Now it came to support and bounced. Came to support and bounced. All right, this was a resistance level here. We broke right through it, went to our next resistance level. And now we're struggling there. Now we pulled back through resistance, and now we're back on our way down to the next support level, which is this area right here. But perfect example of support and resistance, all right? So when I start looking to enter to go long or short on these stocks, I don't want the stocks to be in an area like this, All right, because this means absolutely nothing to me. When we're in an area like this, and we're at all-time highs, the stock's either going to do one of two things. It's either going to break it and make a new high, or we're going to pull it back. But what I find with these stocks is that once we tried to break it 1, 2, 3, 4, 5 times within 2 days, it's not going to make the breakout that it should have. So I'm looking to go to the downside. All right. So do I need more proof of that? What's my next thing going to be that I'm going to tell you guys? All right. What am I going to tell you next? The RSI made a lower high while the price action stayed the same. Okay, now you got two pieces of information. Now let's open this up and look at our double tops. All right, 1 set, 2 set, 3 sets. This is the best one right here. Even right here, we had a higher high and a lower high, and this wasn't by much, but your RSI made a massive divergence. All right, you guys seeing that? Price action stayed the same, RSI did not. All right, even on the 2-minute chart here, again, this one did the fake out breakout. For those that don't know how to read charts, would have been looking to go along on this morning, not seeing the RSI divergences to the downside, right? So as soon as that bell rang, they all bought calls, because what happened? And the first 1-minute candle was green. Let's go to the 1-minute candle. All right. What I tell you, now how did I know that without looking at the 1-minute candle? Because I use the 2-minute chart and I know what each minute means inside a 2-minute candle. So it pulled down. People saw that it was rising. They started making calls, going long, right? And then what happens? Boom. Right? Boom. Boom. And it's continuing. All right, guys? I'm not blowing smoke up your butts. I want you guys to learn this. For those of you who have been with me so long, I know why you're not making money. It's because you're not listening to what I'm telling you. If you would listen to what I tell you, and only listen to what I tell you, you would become profitable. All right? So I'm making this video again for you guys with all the information you need. All right? I set this original layout up for options only, but I found that I loved it. Everything is right here in front of me, easy to see, and I trade on one of the other laptops or computers I got. So anyway, here's the right side of the roof. All right? Here's the Hobbit house. We have not broken the right side of the roof yet. Not once. We don't even have smoke yet. All right, guys? So, right here, we are getting a little bit of divergence, but anyway, until we break the right side of the roof, I wouldn't be looking to go long on this stock. But it gives you a perfect example of what you're looking at. How to use the 20, the 200, and the RSI. Again, the 20, if you're new, you're looking to go long when it breaks the 20, and you're looking to sell when it breaks the 20 to the downside. All right, but don't get faked out by stuff like this. Use your RSI. This one was a little bit choppy ride, but again, we followed the 20 beautifully up until we hit resistance. All right, guys? So the other things that I have on my screen here, if you're wondering what all this is over here, this just gives me a direction of the overall market. All right, the /NQ is telling me what the E-mini shares are on the NASDAQ, the S&P 500, and the Dow Jones. All right, so let me show you how that works. And I use this for an overall feel of the market, the direction. But mRNA, if you come up here to trade, mRNA is on the NASDAQ, okay? So if you look at the NASDAQ and you look at mRNA, it's doing the same thing the NASDAQ is doing, which it should, rightfully so. The last few weeks have been anything but politically correct with the markets. All right, the NASDAQs and everything else were making all-time highs, but the ticker symbols were not following them, which made no sense to me whatsoever. So, yeah, that's why I have these here, for an overall general direction and to see what the market's doing. You got the SPY, the QQQ. There's a bunch of tools out there. This is what works for me. This is all I need to be a successful day trader. And in my opinion, this is the only information any trader out there will ever need in their trading career to be a consistently profitable trader and to be in the top 5% of traders, guys. You don't need much. What they're selling you is boatloads of garbage, so much so that it seems like you're getting information for your money, right? I mean, if I sold this course for $3,000, okay, $3,000, $5,000, $10,000, and the book I gave you or the DVD I gave you only came with 2 pages, and I said all you need is the 20, the 200, and the RSI, you'd probably be suing me because you wanted your money back because you didn't think you got anything with value in it, right? Not knowing that you got more in the 2 pieces of paper that I gave you than you'll ever get in your entire lifetime of trading. Alright, guys, so I hope this video helps you guys out going forward. Remember, always, always, always use these in combination. You want to use your support, your resistance. I keep doing that backwards for some reason. Let me get back to BBIG, see what it's doing. Still haven't broke the right side of the roof. We're back in a support area. But notice the RSI on the 2 minute is making a higher high. Alright, so I would have jumped in right here on that. Let's look at the 5 minute. The RSI, we do have a higher high here, so that's something you got to be careful of. It's not a much higher high, but we do got double bottoms. We do got double bottoms. So far, we're making higher highs and higher lows on the 5 minute overall picture. Alright, here you're not making higher highs and higher lows. You were, but then it pulled back. Alright, so if you're looking at this in the overall big picture stuff, guys. Alright, so what you're looking for is, the next big picture. Are we going to make another higher high and continue up? Could very well be. But notice this would have been another beautiful trade based on this alone. Your RSI divergence. And that happened right here, played out right in front of you guys, right? I just said I would have took that trade. And look at that. Again, beautiful dollar move. So I'm glad to see we having, trades like this appear live right in front of us. And we've done it before, but, I tell a lot of people, I get in at the bottom and I get out at the top, and they think I'm a nut job and a liar. I mean, I'm not. I'm not lying to you guys. There's only one thing I would add right now to this chart is you need a new resistance area, because right in this area you have resistance. I hope you all can see that. But we were testing this area, so this is where I would have been looking to get out. Right? And you have to update these throughout the day. Right? You can't just blindly follow these. Alright? So notice we touched this a few times, pulled back to support. So that would have been a beautiful move based solely on the RSI. Took the guesswork out of it for me. Right? Now, had the RSI not looked like this, but it looked like this, then I wouldn't have been looking to get in, because we made a lower low on the RSI. But we didn't. We made a higher high at the same price. So that was a good trade. Alright, guys. I'm sure I'm missing tons of stuff, but I just wanted to kind of give a refresher course for you guys. a simplicity course for you guys and to tell you guys to make a set of rules and follow them. If your goal is 250 a day and you make 250, shut it down. Okay? If your goal is 500 and you make 500, shut it down. You're done for the day. If your goal max loss is 25 and you lose it, walk away. Don't try and get it back. Until you understand and until you are comfortable with a strategy, doesn't have to be mine, all right? I'm teaching you guys what works. Doesn't mean you're going to follow it, doesn't mean you have to. But if you do, you're going to see a big difference in your trading. All right? So, you know, what works for one person doesn't work for everybody. All right? But this is really all the information you need. All right? I'm not telling you what trades to take or anything like that. You know, you do that all on your own. I'm giving you information that I have found to be very successful in my career, and I'm giving it to you free of charge. All right? You know, there's specific zones you're looking to trade. There's, you know, there's multiple factors that I consider on each trade that I took or each trade that I take. All right? Am I going to go dump $5 million on this? No. All right? I would look to take a nice, maybe 1,000 share trade, in and out real quick, right? Am I looking to put $1 million into this and hold it for 3 weeks? No, that's not trading. That's gambling, all right? So you guys got to come up with your own set of rules, your own set of plans, right? Take it slow. You know, if you want to try and learn this and grasp it, take one share where you think it's going to go up, right? We got divergence here, okay? We had divergence here too, but we got divergence right here. You know, take one share, try it out. Once you start getting comfortable riding a rising 20 like you could have over here. All right? Right here, you got a beautiful 20. And again, that's on the 5 minute. It's going to look a lot different on the 2 minute. So let's look at the 2 minute. Notice on the 2 minute, we actually, you know, pull back a little bit to the 20. All right, but we never broke through the 20. All right? Don't just take this and, you know, think you hit a gold mine and go blow up your whole account. Take it slow. Learn to understand what it is I'm actually saying in the entire video as a whole. Okay? If you can master this video, and I would recommend watching this video 100 times rather than jumping all over YouTube or from guru to guru. Just understand what I'm actually telling you to do in this video. This one video. That's it. Watch it 50 times until next Monday. And see if your trading does not change on Monday. Alright? Alright, guys. Have a great day. God bless. And I'll see you again soon.